find, like in the auto industry, hybrids, a couple of years ago, it was so funny. The government will give an incentive for a sports utility vehicle that weighs 5,000 pounds, and they just flew off the lots. But, you know, you'd think they'd do something ideally with hybrids or energy-efficient homes, especially when we got our energy crisis that's going on. A lot of home builders have said they thought that that would be a good thing, because there's some people, even though hybrid costs more, they just want to, you know, contribute in a small way. And I just think that's something that can be helpful. Mr. Schroeder, just in community banks, I wanted to get back this housing crisis that we're in. I mean, my sense of it is, not to pick on Wall Street, but it's something that was subprime lending. They claim was about 20% mortgages today are subprime lending. They came up with a creative process in Wall Street or whatever, sold off a lot of these products, and probably that a lot of lenders might not have done from a conventional standpoint, sold them off, bundled them up. Now they're international investors. Compared to if they had, you know, let's say someone's got a problem with the community banker, you can go down the street and talk to the banker, and maybe you guys could work with them a little bit. Is that your mindset, what's created a lot of these issues nationally and from your standpoint? Or?
Very definitely, and the point I would like to make very clearly is that community banks and community bankers do not put people in homes they can't afford and in loans that they can't afford. And the problem right now with the mortgage meltdown is that these holders, as you mentioned, are so far away from the actual origination and borrowers that there really is a lack of flexibility in trying to restructure and work with the borrowers as problems emerge.
Okay, thanks. And I think, how much time do I have left? Are you going to? Okay, I wanted to make sure. Just your thoughts. I mean, you're talking also about the community banks in general are pretty good from an equity capital standpoint. Is that what you're saying today?
Very definitely. Community banks are very well capitalized. And again, we are not suffering the direct result of the mortgage meltdown, but because of the slowdown in the economy, we are definitely suffering, as are our customers, the indirect result of the mortgage meltdown. And that's putting pressure on us. It's putting pressure on our customers. It's affecting our underwriting standards, and it is making it more difficult to emerge from this situation.
And what your thoughts on a couple of things we could do up here to help the community banks to get more capital out to small business?
Our bank, as I mentioned, is a very active SBA lender. We originated $62 million in 7A loans last year and $15 million in 504 loans. Anything that can be done to increase a number of things. We can increase the guarantee limit, reduce the fees that are charged to bankers and borrowers, which are significant. I think one trend that's evident within the SBA program right now is the concentration of originations with the largest banks and the sharp decline in the number of small community banks that are participating in the SBA program. So anything that can be done to increase the number of small community banks that participate in the program would be very, very helpful. What that does is drive the benefits of the program in down and out in terms of geographies, in terms of census tracts, and again, from my standpoint, concentration of power is never a good thing. And right now we have a handful of the largest banks in the country, several of them, that are originating 60% of the SBA loans. I don't think that's healthy. And I think community banks need to participate more in the program, and whatever Congress can do to help that would be very much appreciated.
My experience was like Mrs. Ball. It's been 15, 20 years ago. Working with SBA was almost impossible. 8 months, 9 months, a year, you finally just give up out of frustration. What's been your experience, and what's the time frame she comes in, wants to get an SBA supported loan? What is a normal customer of the community bank? How long is that going to take?
Because our bank is an active SBA lender, I am probably not the best person to ask about.
But I'd like to know from your standpoint, being an active lender, what's possible? Yeah. I mean, what's the average? How long she comes in? She's a small business in the community, how long is it going to before she gets a yes or a no? And if she gets a yes, how long is it going to be before she's going to get funded?
Because our bank is able to underwrite and approve on behalf of the SBA. As soon as we have all of the information and can do our underwriting, we can get an approval. 30 days is not unusual.
Okay.
Will the gentleman yield?
Yeah.
If I can also ask then, so what you're essentially saying is it's the challenge of getting banks up to speed the way yours is.
Right.
So that they can facilitate the same type of experience.
Yeah, the learning curve is steep. There are certain application standards, underwriting standards, documentation and closing standards, as well as ongoing servicing standards. Our bank has long since gone up on that learning curve, and we're very efficient at it. The challenge is to get the smaller banks to participate, and again, whatever Congress can do to facilitate that would be very much appreciated, and there are several bills moving through, Chairwoman, that will accomplish that.
Thank you. I yield back.
Thank you. Mr. Sergey, let me ask you, you mentioned the 12.5% in terms of being capped. How much of a difference would it make if Congress relooked at that or rethought that? And I know there's a lot of pressure from a lot of different groups up here on that, but I'm just curious because, today, my mind today needs to be about helping people in small business, and we got to get out of the business of politics to the extent we can. But just what's your sense of how much difference would that make in the credit unions one way or the other?
The difference that we've calculated that it would make if we were able to get up to the 20% level would be approximately $4 to $5 billion that would be available in the marketplace for small businesses. As I mentioned earlier, our average loan is about $181,000. So just that change alone would be able to put more money, liquidity in the marketplace for small business. But also I wanted to talk a little bit about the SBA side of it too, from a crediting perspective. Being able to reduce the fees, as Mr. Schroeder said, reduce the application process, make it a lot more smooth and easier for both the financial institution application side and for the borrower side. I'll mention that a smaller percentage of credit unions today do SBA lending, mainly because of the application process and the fees involved. Credit unions would like to get more involved, but we need a little help in terms of addressing what those fee issues are and addressing what the application process is also.